Hi, this is James Shugg with Westpac London's end of day report for Friday, January the 13th. Well, initially positive sentiment on European markets today turned sour when it became clear that Standard & Poor's were about to announce a range of sovereign credit downgrades, rating downgrades. We haven't seen a formal announcement yet from S&P, but we've had reports from government officials in France, from various news agencies and so on, that France will lose its AAA rating, possibly with a two-step downgrade from AAA to AA, and a range of other European sovereigns will also be downgraded. Although we've heard that Germany and the Netherlands, both AAA, will retain their ratings in today's announcements. As I say, as I do this video, we haven't seen a formal announcement yet, but it is the main story of the day, so it definitely bears watching. An announcement is expected to be made before 7 p.m. London time by S&P. That was the main story of the day, and it will continue to be, but there was some economic data as well. We had the third consecutive trade surplus reported for Euroland, and also the biggest in quite some time. It was 6.1 billion euros. There was a 3.9% surge in exports, and imports were flat, so that was a positive trade development there on the European side. Canada also recorded its second trade surplus in 3 months of just over 1 billion Canadian dollars, but the US trade deficit widened by $4.5 billion to 47.8 billion in November. There was a 0.9% export fall, the second fall in a row, and a 1.3% import gain. The export decline was broad-based, and given that it was the second in a row, it does suggest that weaker global economic activity might be starting to impact on the US economy. There was a fifth straight monthly jump in consumer sentiment reported by the University of Michigan for the US economy in January. The split between current conditions and the outlook was even, and in fact the 5 monthly gain that we've seen takes sentiment from pretty much the lows that we saw in around August of this year, which matched the low point of sentiment during the 2008-2009 recession, to now just 3.5 points below the peak that sentiment reached after the recession a few years ago. So in 5 months we've seen a significant pickup in US sentiment, consumer sentiment, notwithstanding ongoing weakness in the housing market and the jobs market. However, less weakness perhaps than we had seen earlier in 2011. They are the main news stories of the day. In terms of markets, we've still got European markets trading. The FTSE is down at the moment 0.9%. The French market down 0.8%. The German market down 1.2%, and the Italian market down 1.8% today. Now, as I say, these aren't quite closing prices. We're looking at another 20 minutes or so of trade still in Europe. Bond yields are pushed higher in Europe. As an example, intraday we saw something like a 35 basis point jump in Italian bond yields to as high as 6.8%, although they've come off a bit more recently. French bond yields are back above 3% at the 10-year part of the curve, about a 12 basis point rise there. The S&P announcement, not a big surprise, but nevertheless, the announcement itself does seem to be impacting negatively on the markets, and it's confirmation that the European sovereign debt crisis still has a long way to go. The US market, the Dow's currently down 0.8%. We had figures from JP Morgan. Their fourth quarter profit decline was pretty much as analysts had expected. Nevertheless, it did inject a bit of a negative tone into the market. And as I say, we had the wider trade deficit for the US as well. On the commodity market side, we're looking at declines coming through now, with sentiment turning negative in equity markets because of the downgrade story. Currently, oil prices are down 0.5% at $98.59 a barrel. They were above $100 a barrel earlier today. Gold prices are down 0.9% at $1,633 an ounce, and copper prices are down 1% at the moment as well. The Aussie dollar, it's at 1.029 against the US dollar. A little bit softer perhaps, but it's certainly stronger against the euro at 0.812. Yesterday's euro appreciation against a range of currencies, including the Aussie, has proven to be very short-lived, with the Aussie at new highs again against the euro at the moment, given the that the downgrade story has hit the euro quite hard. All right, that's about it for me today and for this week. Keep watching for more details on the S&P downgrade story as they emerge, probably within the next hour or two.